Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. He's speaking to us from South Florida. Welcome back to the show, Rick.
Thanks, Jim. I appreciate you inviting me on.
Rick, have the high-tech stocks finally hit the wall?
I would never say that, because when you have an episode of psychosis, there's really no predicting the limits of insanity. So you're really trying to quantify something that's a disease. It's almost as difficult as figuring out what's going to happen with the pandemic. But we do know that the market is having an episode of psychosis.
Now, the Dow has been gaining lately. Is that because basics still are a factor in the economy, whether people think they are or not?
No, it's really because the morons who are putting so much money into 5 stocks, like they're going to carry the whole world on their backs, just thought, well, we got to rotate the money into something. So that's what they're doing. They're just rotating money. It gets a little bit tiresome to push up stocks that are selling for anywhere between $1,400 and $2,000 a share.
What kind of a strategy should a person be using besides chasing these 5 impossibly high-priced stocks?
I think you should look in across all asset classes and identify the ones that are shunned, the ones that are paying the lowest yield, the ones for which investment expectations are lowest. That's where you want to be.
What areas would you be looking at then?
Well, I still like, it's kind of old-fashioned, but I like Tbonds. I like treasuries, and I think it's a good way to play against the psychosis has definitely affected Doc Copper, which is signaling kind of a global boom. And of course, the signal's just a little bit awry. Again, it's psychosis, but, you've got, such a heavy bet in copper now, and the irony is, or it's not irony, it's more paradox, but that is that China is by no means enjoying some sort of robust recovery where their marginal ability to affect copper prices should be driving it to the extremes where it is right now.
Why do you think people got into copper? They thought it was another version of gold?
Well, we've talked about this before somewhat. It's an idiot trade. It is not that anybody who's jumping into it believes the story that somehow copper is going to be in demand, that we're going to have a global resurgence in the economy. It's the institutional thinking that the next idiot is going to do it. And if the competition is going to is going to jump into copper, you're going to do it too. And so they all suspect it of each other, that they're jumping all over copper, and that's why they do it. So it's sort of a knee-jerk, got to do what the next idiot is going to do, because we'll be left behind if we don't.
How big a factor are the millennials who got laid off or working at home and have this extra cash bouncing around and are investing it into the stock market? How big of a factor are they?
Zero. I mean, these millennials sitting in their parents' basement, trying to find jobs that fit with their degrees in art history and sociology, are not the ones buying Tesla stock at $1,800 a share. They're just small-time speculators, and all of them put together multiplied by 1,000 really wouldn't affect the markets at all. So, but it's, in a time when the newspapers, the mainstream media are hard-pressed to come up with interesting stories about anything, they've sort of built up the millennial story, the millennial trader. I can say personally it's a good thing for me because I do have a trading service that's geared to people who are smart enough to know that if they jump into trading, they're going to lose everything if they simply follow their instincts. And to any of you millennials who are listening, yes, that first trade you're going to make $6,000, and you're going to get way ahead of the game, and you may be up as much as $370,000, as someone I know was after a month or two, but you'll give it all back and more on one trade.
We'll have more with Rick Ackerman right after this.
Tbonds Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Tbonds' 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at tbondsresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Rick Ackerman. Rick, are gold and silver still the best bets out there?
They're great. They're great. I think gold and silver are finally starting to reflect the fact that maybe we don't know exactly what's going to happen in the future, and the future may involve a compromised, more than ever, money supply. And we've got a huge stimulus. We've talked about this before. I think the stimulus is all dead money. The companies they're socking it away for a rainy day. Consumers are socking it away. It has no stimulus effect at all other than in financial assets. So with all the uncertainties out there, and maybe even a second lockdown because of the pandemic, gold and silver are finally starting to show some a neural response to stimuli. And I've been using for quite a while a target above, I think it's 1882 or something, basis COMEX August gold. So we've got a little bit of room left. And I want to see what happens when gold gets to that target. If my suspicions are correct, it's going to pop through it, meaning the bull trend is likely to continue.
Do you target any one particular area in gold, bullion, certificates, miners, stocks, ETFs?
Well, my subscribers like I track the gold futures for them, and they can kind of work some of the ETFs. There's one ETF that goes under the symbol GLD. That's a good pure play in gold because they simply acquire the real stuff. But I also track GDX and some other things that, as you may know, they don't exactly follow gold step for step. So they can be a little bit dangerous, but eventually you're going to have, I think, an enormous pop in these mining stocks because they are just so hugely undervalued. And when I say that, I'm not a gold bug. I'm not really I haven't been sitting on mining stocks for 20 years and just kind of despairing over the performance of penny stocks. I'm just not in that world. But I have to say that having toured some of the mine sites in Mexico and everywhere from Idaho, Mexico, Canada, with a group of guys, so many of these operators have very, very good proven reserves. They've got a lot of gold in the ground, and their operating costs have diminished. Their energy costs are way down, and so I think they're hugely undervalued. But I think it's still a while before that fact kind of sinks into the proletarian mind, and we get the amazing rally that has always been promised in these mining companies and the junior exploration companies.
For people unfamiliar with junior mining, is it a dangerous area to get into?
Not at all. Not at all. I mean, the juniors basically find the gold and they come in with partners, the big companies that have the resources to get it out of the ground. And, generally it's said that a mining company is no better than the people who are running it. And there are some good people in the industry, and it's not hard to find out which ones have the best reputations. But and some gold investors simply track people rather than mining companies. So that's a good place to start. Just somebody with a track record who's built profitable companies out of exploration ties and gold miners themselves.
Someone once told me, find out which company has its executives fly in first class and which ones fly in economy. Pick the guys who fly economy. They're worried about the bottom line.
Yeah, but they may be a little too worried. You know, some of these mining companies run so low to the ground that just a bad quarter or two can put them in really dire financial straits. So, you know, many of them are frugal because they have to be, and that can hurt because it costs a lot really to drill some of these exploration bores, and so every penny counts. But some companies are much better financed than others, and that's certainly a factor if you're picking stocks.
We'll have more with Rick Ackerman right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Rick Ackerman. Rick, has oil's recovery been a surprise, and is it surprising it's held in around $40 this long?
It's a surprise to me that the yo-yos and charlatans who are keeping the price up have actually succeeded in flattening things around $40. There's, believe me, not $40 a barrel worth of demand out there on planet Earth, so it's really a tribute to the pumpsters. We have to keep oil pumped up because it is a major source of collateral for a quadrillion-dollar derivatives market. We've talked about this before, too. When we came out of the great financial crash of 2007 and 8, the paper shufflers, the financialization guys looked around, and the question was, what can we hawk up to our eyeballs now that real estate is temporarily out of play? So they went into the energy patch, and there was so much lending done and securitization of oil in the ground that the powers that be really need oil to be, well, $40 doesn't quite make it because most producers can't get oil to the market profitably or at $40 a barrel. They need above 40, and above 50 is better. So let's just say that at $40 a barrel, the illusion, the pump and inflate operation is at least it's convincing enough that a lot of people are falling for it.
What other areas do you think should be explored for investors besides the typical ones we've just mentioned?
Well, I think there's always the story stocks, and I mean that in a Peter Lynch sense. You don't go after stocks that someone else says are great for whatever reason. You go after the stocks that you can see certain ideas coming into play in the markets. They could be retailers. They could even be, who knows, restaurant chains, people who, companies that are figuring out ways to get to exploit the limitations of the pandemic, of the lockdown. So in that regard, it kind of forces you to look at stocks in the way that you should. You invest in stocks that you understand. And even though it's hard to get a handle, let's say, on companies that make microprocessors, it's much easier to see the possible success story in some restaurant or food seller that allows really good, easy pickup of gourmet meals or something like that. So I think you should sit on cash unless you have options for it. You have investment opportunities that you personally understand.
Rick, how would you sum up what's going on in the markets right now?
Well, it's, as I said, it's mass psychosis, and it's really a response to Fed stimulus. The stimulus has gone into the easy assets, the ones that anybody who can chew gum could inflating stocks. It hasn't quite filtered into real estate because real estate was plenty inflated before the pandemic, and buying a big new expensive house is just not a priority these days. People are just kind of hunkering down. So the markets are really just crazy. I think you got to stay out of them. You certainly have to stay out of stocks at these levels. Even Buffett doesn't really want to come out and say that pretty much everything sucks. He doesn't want any money in anything. He came out of hiding just to put $8 billion into a natural gas company that had taken on a lot of debt, but Buffett didn't get that part of the deal. So Buffett is just kind of, for the sake of appearances, he's in this natural gas play, but it's not a big one by his standards. So I think if Warren Buffett doesn't want to be in the markets, in the equity markets, then neither should we.
And it must be nice to be Warren where you think of $8 billion as small potatoes.
Right. It's nice. It would be nice to be Warren and wake up one day and find that you've somehow, your net worth has decreased by $50 billion, and you still have plenty. You still have more than you and 10,000 of your neighbors could spend in 100 lifetimes. So he's in good shape.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website, rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.